Say that you're in your 20s or 30s, like most of our financial coaching clients, and you're looking for life insurance. And if you're in your 40s, keep watching as well, because today's topic of life insurance riders applies to you too. Now, generally speaking, the younger you are, the healthier you are, and the better your rates, the monthly premiums on your life insurance will be. So you want to lock in these better, lower rates, these better, lower premiums now, while you're as young as you'll ever be and in as good health as you'll ever be. What's known in the life insurance industry as your current health rating. Great, so you buy your life insurance policy now and lock in these awesome low premiums at your current health rating. But how do you know that the life insurance policy you're buying today, regardless of whether it's a term life policy or a whole life policy, how do you know that this life insurance policy today will still be the right one for you and your loved ones 2 years down the line, 5 years down the line, or perhaps even 10 years down the line? The answer is you simply don't know. The life insurance policies that my husband and I first bought over 15 years ago when we got married are certainly not what would be best suited for us now. Unfortunately for me, I wasn't a life insurance expert then. And clearly, neither was the life insurance agent that sold it to us. Fortunately for you though, I am a life insurance expert now. So, how do you customize a life insurance policy so that it best suits your budget and your needs now, but at the same time, still gives you the flexibility that you need to change things up later when your life, career, income, and family circumstances change? Via life insurance riders. That's how. Insurance riders are additional benefits that can be bought and added to a basic life insurance policy. Buying an insurance rider from the get-go means paying a bit extra, but generally the additional premium is low because relatively little underwriting is required. Some, but not all insurance carriers will let you add on insurance riders after you've purchased your life insurance policy. But this will typically cost you more than if you added on the riders from the very beginning. The reason for this is because additional underwriting may be required. So it's best to thoroughly understand and purchase the insurance riders you need from the very beginning at the same time that you buy your life insurance policy. Underwriting is the process that an insurance company goes through to determine how risky it is to insure you and how much your monthly premium should be as a result of this risk. And less underwriting typically means less work, fewer medical exams, and not as many question marks, which translates into lower costs for both you and the insurance carrier. I'll be using the terms insurance carrier, insurance company, and insurer interchangeably throughout this video. They mean one and the same. So, in today's video, we're going to talk about the 4 most common insurance riders that you should consider so that you can buy the life insurance policy that best suits your budget and needs now, and that will continue to grow with you later as your life, career, income, and family grow. For our loyal subscribers and viewers, welcome back. We love you guys. And for those of you new to Dive in NestEgg, we love you too. And welcome to the #1 place to learn about money, investing, and retirement. I'm Jennifer, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17 and graduated top of my class from NYU and Harvard Business School. Studying? You guessed it, finance and business. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about financial literacy and wellness. Please note that Diamond NestEgg is a financial literacy education and coaching company, and that I'm a licensed insurance broker. We are not a bank, securities broker, legal, tax, or financial advisor. Now let's dive in. Insurance rider number 1, the waiver of premium rider. In my opinion, this is the most important rider that you should consider, regardless of whether you're buying a whole life policy or a term life policy. Whole life insurance is permanent life insurance and provides coverage for your entire life so long as you pay your premiums, so that your beneficiaries receive a benefit no matter when you pass on. Term life insurance, on the other hand, is temporary life insurance and provides coverage for a specific period of time, such as 10, 20, or 30 years. Because of this, and the fact that term life does not include any of the savings, liquidity, and generational wealth building features that a whole life policy does, term life usually costs 10 to 15 times less than whole life. This waiver of premium rider that we're talking about can be added to both a term life policy and a whole life policy. With a waiver of premium rider, you don't have to pay your monthly insurance premium if you become permanently disabled and can't work. Most waiver of premium riders also allow you to skip your premium payments if you're not able to work due to injury or illness before a certain age. Premium payments resume when you return to work and are earning an income again. This waiver of premium rider is particularly important if you are the main breadwinner in your family, especially if the premium on your policy is high, like with a whole life policy. Do note that this rider usually expires at age 60 or 65, and that the definition of permanently disabled and can't work is not the same across all insurance carriers. So as always, be sure to read that fine print. Guys, if you're enjoying this video, we'd love a thumbs up and a subscribe so that we know what content you like and can keep producing more of it on this channel. Also, it lets YouTube know that this is useful stuff for the personal finance community, and it will push this video out to others like you who are interested in growing and protecting their wealth and their loved ones. And if you're new to life insurance, be sure to check out this video over here on life insurance basics and the pros and cons of whole life versus term life. So insurance rider number 2, the guaranteed insurability rider. The guaranteed insurability rider, in my mind, is the second most important rider that you should consider when purchasing a whole life policy. And term life policy folks, watch on, because the one after this will be just for you. When you first buy life insurance, your insurer will often ask for a medical examination, although some insurance companies have waived this requirement recently because of COVID. Typically though, this exam involves a blood pressure check, blood and urine samples, as well as a body mass index measurement. The results of the exam, along with your answers to a medical and lifestyle survey, are used to determine the health rating that we referred to earlier in this video. This health rating impacts how much you pay for your life insurance. The better your health rating, and therefore your overall health, the lower your premiums are likely to be. A guaranteed insurability rider, if approved, allows you to buy additional insurance at a later date, usually at certain ages or certain intervals, like every 3 years, without undergoing another medical exam or providing evidence that you are insurable. When the time comes to add more insurance coverage under this guaranteed insurability rider, the insurance carrier will adjust your premium based on your age, but not your health. It will take the health rating from when you originally purchased the guaranteed insurability rider. So say that you purchased a whole life policy with this rider at age 25, when you're single, without dependents, and you're super healthy. Now let's fast forward to 15 years later. You're 40 with 2 kids, a mortgage, and a heart condition. And you want to purchase additional coverage under the same whole life policy with this guaranteed insurability rider that you purchased at age 25. Well, your insurer will take into account your age 40, when setting the premium for the additional whole life coverage, but they will have to take the same health rating as when you started the policy with the guaranteed insurability rider at age 25. No new health exam required, meaning that the insurer can't downgrade your health rating and charge you higher premiums because your health has deteriorated over time. If, on the other hand, you were to buy a brand new life insurance policy because you didn't have this guaranteed insurability rider in place, you would most likely have to pay higher premium rates or be denied coverage altogether if your heart condition is severe. A guaranteed insurability rider is also well suited if you know you want to buy more whole life insurance down the line. In this instance, you could buy the amount of whole life coverage that you can afford currently with this guaranteed insurability rider in place, and you'll be able to add on more whole life coverage as your income grows over time. We're seeing more and more younger clients do this right now. Listen, life insurance can be confusing, but it doesn't have to be. We make sure our clients and their families are well protected and making their money work harder for them every day. If you're interested in speaking to a human being to see how we can best customize a life insurance policy to your needs and budget, drop us a note at jennifer@diamondnestegg.com. You can also take a look at this video here to learn more about whole life insurance and the additional benefits of saving, liquidity, and generational wealth building that come with it. So far, we've talked about two insurance riders. Insurance rider number one was the waiver of premium rider, the most important one from our perspective for both a whole life and a term life policy. Again, this rider exempts you from paying your monthly insurance premium if you become permanently disabled and can't work, or if you're not earning any income due to an illness or injury before a certain age. Insurance rider number two was the guaranteed insurability rider, the second most important rider for a whole life policy. It allows you to buy additional life insurance at a later date at the same health rating as when you first purchased the original policy and rider, thereby giving you better monthly premiums. Now, let's move on to insurance rider number three, the whole life conversion rider. Whereas the guaranteed insurability rider is the second most important rider for a whole life policy, the whole life conversion rider is the second most important rider if you're buying a term life policy. A whole life conversion rider lets you convert term life insurance into whole life insurance, into permanent life insurance, without undergoing a medical exam. So basically, at the same health rating you had when you originally purchased your term life policy. It's similar to the guaranteed insurability rider for a whole life policy, but instead of adding more whole life coverage, you're converting term life coverage into whole life coverage. There's usually a deadline by which you have to make the conversion from term life to whole life under this rider, so make a note of that. With this rider, this is really a case of use it or lose it. This whole life conversion rider is an especially attractive option for younger clients who are just starting their careers and/or families. They need and want life insurance, but they don't have enough money yet for a whole life policy, which has a higher premium than term life. So they go for as much term life insurance as they can afford and add in this whole life conversion rider so that they can convert as much term life as they possibly can into whole life further down the line when they do have the money for whole life. Be sure to check out this video here to learn more about the advantages and disadvantages of term life insurance and why you should consider buying term life while you're young to lock in the best rates. And this video over here as well to better understand the added benefits of whole life insurance and also so that you understand some of the misconceptions out there about whole life versus term life. Next on the list, insurance rider number four, the accelerated death benefit rider. Say that you've purchased a life insurance policy for yourself and designated your parents, partner, or children as the beneficiaries. Under an accelerated death benefit rider, you can use the death benefits if you become terminally ill. For example, you could use the death benefits for hospitalization, doctor's visits, and so on. What usually happens with an accelerated death benefit rider is that your insurer will give you a percentage of the death benefit from your insurance policy in advance and subtract that amount plus interest owed from what your beneficiaries would receive upon your death. The insurance companies we work with, only the best of the best as always, because we want the best for our clients and for you as well. So these insurance companies that we work with, Guardian and Mass Mutual, they don't charge a premium for this accelerated death benefit rider, but other insurance carriers might. So be sure to check with your insurance company. And again, the definition of terminally ill varies by insurer. So be sure you've checked the fine print. Guys, there's so many ways you can personalize a life insurance policy so that it suits your life, family, career, and income circumstances now as well as later. Today, we've just gone through the insurance riders that are the most important to our clients and in our view to many folks that purchase life insurance. But as our trademark saying goes, everyone's financial journey is different. There's so many more insurance riders we could talk about: the accidental death rider, the disability income rider, the long-term care rider. the child term rider. The list goes on and on. You get my drift. So if you're interested in a personalized, best-in-class policy for you and your loved ones, not just any basic old thing, drop us a line at jennifer@diamondnestegg.com or leave us a comment below to see if we can help you in any way. As always, thanks for watching, and if you enjoyed this video today, please don't forget to hit that thumbs up and subscribe button. We'll be back in a few days with another money-saving, wealth-building video just for you.